Hey guys, it's Luran here, the engineer trader, and welcome back to my channel. Guys, in today's video, I want to cover four stocks that I have my eyes on, and in 2022, I believe these stocks are about to make some moves to the upside. So if you're someone that is trading the stock market, whether you're trading equities or options, then you don't want to miss this video, guys, because I'll be breaking down these four stocks. I'll touch on the technical analysis, I'll touch a little bit on the fundamental analysis, and I'll show you guys why you need to have these stocks in your portfolio like before the start of the new year. So you have some time, you have a couple of days. The market is this is the last week of the trading year, and the market's a little slower. I mean, we have a lot of green days in the past 4 days, but a lot of stocks are trending sideways, not making aggressive moves to the upside. So before we jump into it, guys, remember to subscribe if you're new to the channel. Remember to smash that like button. It helps with the algorithm, helps the channel to grow. So let's jump right into it, guys. So the first one is Moderna. Now, you guys all know that Moderna is one of the leading stocks, or one of the leading vaccine stocks for COVID. And, countries around the world are grabbing up vaccines because with the new, Omicron variant and all that type of stuff, more and more, we need, third doses. 6 months from now, they'll probably tell us we need another, fourth dose, all that type of stuff. So these stocks aren't going anywhere, Pfizer, Moderna, AstraZeneca, Johnson & Johnson, but Moderna is one of the top tier, COVID vaccine companies. Let's face it. So right now, Moderna is down. Let's look at the charts here, guys. This stock is down 57% from its highs back in August of this year. And as you can see here, the stock is sitting at a key level right now on the 28th of December. The stock is sitting at a very key level. Now, I'm looking at this level right now, and I'm seeing the stock has developed a trend line to the bottom here already. And I already initiated position in this one, by the way, yesterday. I took some position. By the end of the day today, I'll probably be adding some more. So I just want to show you guys this stock is down hugely. And I think it's down the most it's ever been down in its entire, if you look at the entire chart history, this stock is down the most for the entire chart. So I think this is the bottom. And like I said, this is an easy one to risk off for this line that I have drawn to the bottom here. And you want to buy this one and you want to hold it, guys, because like I said, this one will just get better. This company will continue to rake in, billions and billions of dollars from around the world for selling its vaccine. So you want to buy this here. You want to hold it at least to test all-time highs again. At least that's my intent. Now if it breaks this line here, I'm out. Usually my risk is very low here, as you notice. If this should break this line at the bottom here, I'll probably be out for a 5% loss, but that's okay. But I'm holding this all the way back to all-time highs, which will get me 90% return on my money. Now I'll take some profits in phases. I'll probably get out there at that 380 level, which will be like 56% return. And then the other 50%, I'll take it out at the top. And I estimate that will reach sometime in March, because we got earnings coming up in March, guys. I could see this one coming, consolidating within the wedge, break out on earnings, and then make a move within a month after earnings. So like I said, March, April, we can be back at all-time highs on this one. If at earnings it breaks down, then we can get out. You'll probably get out at break even. But like I'm saying, this stock is prime and ready to make a move higher. Let's look at the charts, the fundamental picture. See what this one is saying. So for the fundamental picture here, guys, you see on the EPS side, the stock isn't doing so well. But, over another few quarters, I can see this one turning things around and getting into positive side for the EPS. This stock is S&P 500. It's a NASDAQ 100 stock. So there's a lot of attention. There's a lot of liquidity on this stock. So I foresee this stock making a move pretty soon. It's not making a move to the downside. Like I said, it's S&P, NASDAQ 100. So the volume is there to push this one higher. Let's look at the next stock here, guys. We got Roku. Obviously, you guys know this is one of the best streaming company in the streaming space. And you all know that streaming isn't going anywhere. It'll just get better. This one is also down, 59%, which is one of his largest decline in this stock's history as well. I think one of the other largest decline we had there was, let's see here on this one, 42%. So this one is even larger than the other decline that we had there. So I foresee this one making a move back to the upside. We already got a nice double bottom here on the slope, and I can see this one pushing to move higher just before the earnings season there. So I'm already in, but this one I'm in all the way here. Back in November I took a position, so that position is doing nothing much right now. It's barely pushing up a few percent, but again, this is another long-term hold. I'll write this one up on earnings, maybe a month after earnings, and we can push up about 75 to 80% of the all-time highs. I'll be happy with this one. Let's look at that. We'll be looking at maybe an 80% return on our money. What's our risk? Our risk is the bottom here, guys. Even if this one breaks the bottom here, I probably wouldn't get out. You might say, hey, but you're violating your risk management. Some stocks, guys, I violate my risk management and I don't even bother about it. Now, Moderna, this one is so volatile. These are biotech stocks, right? Something bad can come out about the vaccine, and this one can gap down and just go down and lose another 20, 30%. I don't foresee that happening, but that's how biotech stocks work. So I would never violate my risk on a biotech stock. If it breaks the support, I'm out. But with Roku, the business model here is solid, guys, with these streaming companies. If it's nothing substantial happening in the fundamental picture, and this one breaks this support line, and it's down 60% already, guys, I'm not getting out. I know it's probably just coming down here to do a double bottom or shift a little bit lower, but eventually, within the next few months, it'll go higher. That's the plan. Now, guys who are jumping into stocks when they barely pull back, 30% or 20%, they gotta worry, because look at how much more it went down. But when it's down 60% and it's a solid company, no, you won't fake me out, guys, out of that one. Let me show you the picture for Roku. On the fundamental side, this company is solid. Look at the sales, growth here, just stepping higher. The EPS picture is getting better. I did some research into their filings, and I can see things are really improving with this company. This company will become profitable. Actually, it is profitable already. See, 286 million in the plus side, just not reflected here on the EPS just yet. So when they finish the 2021 year bars here, then it might reflect that positive EPS. But the stock is already profitable here. If you notice, this is a positive number. We have the sales, 2.5 billion, which is just, the trailing 12 months is forecasted to be higher. So this stock, like I said, I won't get into all the details, guys, but this is a streaming growth machine for a stock. So this is a good area, a general area. If you're looking to take a position in this one, you want to get in. Look at the beats, guys, on this. The stock never miss on earnings. Just when it first IPO'd, it had a miss. But look at all these greens, guys. Just beat. And when I say beat, this stock beats like big time. Like just crushes the earnings every time. Look at all the greens at the bottom here during the earnings. So I consider this stock like never missing on earnings. So once the earnings come around here, it's automatic that the stock will just beat on its earnings, and it'll push higher. That's just how the stock operate. So yeah, like I said, this is an early position that I'm in. This is not options. This is straight equity, and I'm buying these ones for a medium-term hold. 3 to 6 months. Looking to double my money potentially on this one. So that's Roku, and then we have PayPal. PayPal is another solid company, guys, and it's down huge right now. It's down 41%. I think that's the largest decline for this stock in its history. This is another growth machine. As you can see here, all these greens since the IPO back in 2015. We had one miss here, and everything else is just green. This one is oversold. Like, it's very obvious. If you do market beat Let's check out the what analysts are forecasting for this one. So for market beat, this one is a buy at market beat. High price target 350. The average is 282. 282. This stock is sitting at 191. So this stock is just way oversold. So you wanna grab this up here. My risk obviously is that line there, but that's not a hard risk. This is another great company, and if nothing changes fundamentally and they should break this risk, this is another company that I would just hold and not get out of my position, not be shaken out of my position. Let's put it that way. Like I said, I won't get into too much of the fundamentals here, but I just wanted to show you guys quickly the general area that I'm looking to get in. I think I got in 2 weeks ago on this one, somewhere around this consolidation area. So it's a long-term hold, so I don't look at this one every day, but I'll hold it for 3 to 6 months, and I can foresee not this earnings, but the earnings that's coming up sometime in May. I can see that one is where the stock will break out of this wedge that it's forming here and move higher. And then the last one, guys, is Coop. So this is a cloud software application company, and this is a solid company, guys. You know, Coop, it's one of those companies that never miss. You guys see the trend here. This is a company that never miss on its earnings, beats every time, and it's a growth machine, and it's a low float, meaning it has a low amount of float available on the market, and because of that, it moves. Let me show you guys the fundamental picture in this one. See, nice growth. Still losing money, still not a profitable company, but it's getting there, and it's a nice growth. It has 65 million shares float. I like to trade these ones that are under 100 million float because they move aggressively. Now this one, I already got a position in this one as well. After the reported earnings, it beat on the earnings, but it went down a little bit, and I bought sometime mid-December. I bought some shares on this one. This one is down plenty. If you look here, we're down 61%, the largest decline in the company's history or the company's chart. So obviously I bought up some here, and I'll just write this, like I said, for the next couple of earnings, 6 months or so, and I expect this one to be back to that 280, 300 level. That's where I take my profit, walk away. Overall, the stock market is moving higher. As you can see, the SPY, which represents the S&P 500, is at all-time highs. Broke out this week, as you can see here. Yesterday, make the break to all-time highs. So this one is moving higher. That's a good sign to start the new year. So yeah, hopefully things continue in that direction. But I just want to do a quick breakdown to show you guys what are the stocks that I'm getting involved with as we enter the new year. And I just wanted to share my thought process and ideas, trading ideas with you guys. So yeah, hopefully you guys got something from this one. And remember, if you're new to the channel, remember to subscribe, smash that like button. It helps with the algorithm and helps the channel to grow. Until next time.